Hey guys, welcome back to Jesse Invests. I appreciate you checking out the channel, or if you are a returning watcher, I thank you for coming back and hanging around for the next update. The update is finally here. It is long overdue. Today we're going to dive into a full portfolio overlook. We haven't done this in a couple months, and it's time to get back into it and check out where I'm at. So, without further ado, hit that subscribe button down below. Oh my gosh, couldn't think of it. The like button down below, the sub button down below helps me out a lot. Show some love. It's free to do so. All right. So we're going to start with what you see on the screen right here, right now, which is the investment returns visualizer. This is at a glance how my investments have done compared to the S&P 500 each month. So right now, we can see as of November 1st, I've got this information in. I believe last video we were around July or August. So since then, let's start with Bitcoin. It was kind of doing whatever, way underneath the S&P 500, which is the green line. And my other portfolios are the colors in the middle. The purple, the Bitcoin, was not doing very well. However, Bitcoin has been on a frenzy lately with the way that the election went and just all the craziness with some hype around Bitcoin. So we can see here that it went from being an underperformer, in fact, to in the negatives. It kind of just shot back up, and look at it now. It is rocketeering to the moon. It has passed, right now, Bitcoin has earned me more than gold, earned me more than my retirement account, the red line. And it's even past the dividends portfolio that I make all my videos around, my main portfolio. It is past that as well. Right now, Bitcoin is a top performer, beaten only by the S&P 500. Will it continue to go like this? Probably not. You can see the major swings it has. Sharp downward spikes and then sharp upward. It's completely unpredictable, super volatile, not a legitimate investment in my opinion. But still, it's something to keep your eye on for sure. I have about 3-4% of my investments inside Bitcoin. So not a whole lot by far at all. But still a few bucks in there to kind of see what happens, see how that goes. It's fun to see how it ends up, right, over the next 40 years. So next, let's move on from Bitcoin to gold. Gold, since my last video, has been slowly crawling upwards, but it hasn't done a whole lot, right? We can see that S&P 500, since my last video, has been also slowly crawling upward. Nothing super great here. My M1 Dividends portfolio, my main portfolio here, we can see since July, August, it has gone sharply upwards, and it's almost closed the gap between my hand-picked investments and the S&P 500, which is really exciting because I really want to be neck and neck with the S&P 500. I'm not really aiming to beat it, but I want to be neck and neck, maybe even passing it at times. I think that would be really fun. And it looks like we are on track for that. Lastly, my Roth IRA account was heading downwards at the time of my last video. It made a good turnaround for the positive and is heading back up. So I really like where each portfolio is at, right? S&P 500 is neck and neck with Bitcoin returns and neck and neck with my returns for my dividends account. My retirement account is a little bit down here, but still holding steady, and gold's kind of doing its own thing. This is a really great spot to be at. So if we want to see the numbers on those returns, guys, we can take a look here. We are at, my Roth IRA is up 24%. My M1 dividends is up 36% all time. My Bitcoin is up 38% all time. The S&P 500 is up 42% all time. And gold is up 19%. So the Roth IRA is 24% since I've created it. M1 Dividends is up 36% since I created it. Bitcoin is up 38% since I started investing in it. And S&P 500 is up 42% since I started investing in my other accounts. And then gold is up 19% also since I started investing it. They all started in January 1st. So all these returns are based off on since Jan 1st. So yeah, that's where we're at there, guys. Next, let's go to monthly dividend income. What dividends have I earned in my account since the last video? And since my last video, the M1 Dividends portfolio has made, let's take a look here. In July, we made $7.59, which is not bad, one of the highest months yet. In August, we made $1.04. In September, we made $9.96, which is a really great month. That was the best month yet. In October, we made $1.77. So the account has made $43.38 year to date, about $4 a month, and way higher than last year's $11.92 in dividends we made. And then my Roth IRA, my retirement account, did make us $29 this month, $15 in the past month, nothing in August, for $134 year to date. Eventually, because my Roth IRA account is not a dividend-focused account, my dividends portfolio will pass it in dividends. But right now, I have a lot more money in my retirement account, so we're making more there. But yeah, $1 here, $9 there, $1 there. Now, how did I make these dividends, guys? Let's jump into what my personal picks are, what you've all been waiting for. What do I invest in, and how have they been doing? Let's take a look. Let's dive right in. This is my dividends account, guys, on the app called M1. I currently have 40 cents in cash, and I have $2,630 invested. Of that amount, $59 is dividends earned. So a little higher than the number I got on the sheet there, but $59 total earned. And $418, I'm up $418 in market gains. This means of my actual money in here, it is $2,200. And then $400 on top of that is returns. $59 is from dividends. So all that totals out to $2,600. This is a rate of return of 34%, which is super great. This is really high. This is really high returns for only being in here 2 years. This is an average return of 17% a year. A CD will not get you 17%. A high yield savings account will get you 4 or 5% on the high end. It won't give you 17%. Investing in stocks is so good for getting a return, especially in the long term. Not just any stocks, though. You'll see here when I show you my stocks in just a moment that they are proved time-tested winners. They are they have a great history of performing. They make a lot of money. They're in the S&P 500, and a good portion of these picks is actually just ETFs that invest in the S&P 500 already. I'll show you what I'm talking about. These are my 6 slices. I invest in growth stocks, industrial stocks, restaurant stocks, financial stocks, grocery stocks, and tech stocks. In each of these sections, I have about 2 to 3 hand picks. Let's jump in. $1,300 in my portfolio, or 50% of this entire portfolio, is invested in 3 stocks: schd, VU, which is the S&P 500, and VYMI, which is an international high-yield portfolio. This ETF invests in individual international stocks, not part of the United States. So this right here, among these 3 stocks, we're exposed. These 3 ETFs expose us to hundreds and hundreds of stocks. I believe, I want to say over 1,000 stocks, with that being 500 and that being several hundred international and that being more as well. Over 1,000 stocks. So when I invest in these 3 ETFs, that ETF I invested in then spends their money to invest in those 1,000 stocks. So I have great exposure to the entire world market just off of these 3 picks. The rest, the other half of my portfolio, is really just hand-picked stocks I like for fun. The real work is these 3 here. Those are where the real returns are coming from. However, the hand-picked stocks are not doing shabby either. In industrials, I have 2 picks: Caterpillar and Waste Management. I have 53% returns in Caterpillar and a 4% return on Waste Management. As for restaurants, I have 2 picks: Texas Roadhouse, up 94% to date, and 10% returns on McDonald's. McDonald's, and Texas Roadhouse. Financial stocks, I have a few more picks in here. I have 3. I have MasterCard, JP Morgan, and Aflac. So MasterCard, JP Morgan, and Aflac. 38% returns on MasterCard, 79% on JP Morgan, and 48% on Aflac. Now, how do I get all these high returns on these stocks, guys? I buy them and I keep buying them on a recurring schedule. Every week, few dollars into that stock, few dollars into that stock, few dollars into that stock. Whether it is tanking, whether it's skyrocketing, few dollars into that stock, few dollars into that stock. It's creating an average cost that is beneath where that's slowly lowering. So I have higher returns. The goal is that the stock is increasing in value quicker than my average cost is going up. By doing this, it's called dollar cost averaging. You are not guaranteed returns. Of course, you need to pick a good stock. You need to have good market conditions, invest in the long term. But this is a time-tested method to get a return on an investment. So we're seeing 79% on JP Morgan because I've been buying bits and pieces here, especially I initially started buying it like in a year ago, 2020. Like the stock's about a year old, not 2020, sorry, 2023. So a year ago, it costed a lot less. Now JP Morgan in the last year has really slowly risen while I'm slowly adding more and more. So financials, lastly, we have grocery and tech. In grocery, I invest in Costco, up 58%, Kroger, up 40%, and Target, up 38%. And in tech section's up 37%, Apple up 40%, Microsoft up 18%, and semiconductors up 44.91%. This here is an ETF that invests in NVIDIA, AMD, creators of semiconductors. So that is my portfolio, guys. If we look at activity, we can see so far in November we've earned 12 cents from Costco. We've earned 10 cents in dividends from Apple. We got paid 15 cents just from owning MasterCard. And we got a few dividends in October, including a 48 cents from JP Morgan Chase. Now, what are the best performers in my portfolio? What is earning me the most money? The top 3 in third, let's do top 5. Top 5 in 5th place is Kroger, up 29% or $19 in the green. 4th place is Apple, up 31%, $22 in the green. 3rd best performer is Aflac, up 33% or $14 in the green. My 2nd best performing stock is Texas Roadhouse, up $59 or 57% in the green. My best performer, guys, drum roll please, is JP Morgan Chase Bank, up $37 or 66% in the green. Now, what are my worst performers? Let's go down to there. I have no performance that has earned me a negative return. No performance. No stock that has earned me a negative return. My international stock fund, VYMI, is only up $1 in the green. So basically break even. You can also say the same for waste management, up only 3%. I'm kind of break even with McDonald's, waste management, and VYMI, but still earned some money on those. So that's nice to see. All in all, my unrealized gain on these stocks, if I sold all my stocks right now, I would get all my money back as well as $404 return. So we're in a good spot, guys. I have $2,200 invested, and I could pull it out for $2,600 right now. Up 34% on a money-weighted ROR. You can see this chart right here. We have been shooting up in over the last year. We're in a good spot. Last but not least, since this is a portfolio review, I will go into my retirement account. And you'll notice if you have kept up with my retirement account in past videos that it's taken a hit. I had a life crisis where I had to drain 100% of my savings account as well as cut into investments. I didn't want to cut into this dividends account, even though logistically it would make the most sense, have the least fees to take money out of this account. I didn't want to touch it because this is the account I have dedicated to these videos. You guys, it would really set me back and hurt my confidence in these videos if I were to take money out of this account. I want this account to slowly be growing, and I want to keep you guys on the path of having it grow. So I made that decision, which was a hard decision, but it was for the good. And it's apple or orange, right? Either way, it's a hit. It's a small difference on which account I picked to take that hit from. But I did choose my retirement account. So right now we have $6,400 in it. I can't remember what it was last time I made a video on it. I believe it was around $7,000. But right now we're at $6,400 in the retirement account with an all-time return of 22.38%. And we're up 15% with VU, a break even with VYMI, 9% on Vici, and we're down 13% on Smith & Wesson. So those are the positions I have in this account. That's where I'm at with this Roth IRA, just to fill you guys in on that. Now, let me know if I should add any new positions to these portfolios. Right now, I have only 4 in the retirement account. I have only 16 holdings in this account. At one point, I had almost 22, and I slowly brought it down to 16, which I feel like is a perfect median. But I have been looking at Lockheed Martin, ticker LMH, I believe. So let me know if that's something I should, let's see, Lockheed, it's LMT. If this is something I should add to either portfolio. If I did add this position, I'm leaning more towards my retirement account rather than the dividends account, even though it pays a dividend. Lockheed Martin makes weapons for war. It's just a stock that has been insanely productive since inception in the last 5 years, 35% return. And then the last year, 19% return alone. We can see that they have a 2.36% dividend yield. I really have nothing to complain about this stock. The only thing is that they do pay, I believe it's 60% of their earnings out in a dividend. So they do pay a lot of their earnings out to shareholders as a dividend. But I don't really have much to complain about. And I feel like this would be an interesting stock to hold. But I don't want to hold a stock just to hold it. If the S&P 500 is doing better, then I should just hang on to the S&P 500. But let me know if you guys think I should invest in Lockheed Martin, especially with the way the world's looking right now. But yeah, that's about it. Next video, guys, we will look at all the dividends the account has earned in November and new performers. Let's see what has passed in the top 3 performers, what kind of income we're getting, and let's watch that snowball roll. So thanks for staying updated, guys, and let me know your feedback in the comments, and I'll catch you on the next video or live stream. Later, guys.